Amazing. So my name is Pavle. I'll be hosting the next 30 to 45 minutes of the conversation we have here at the stage, covering basically compliance trends and some of the learnings we had as a company from building compliance-specific products generally in the area. One disclaimer, especially as we're like a smaller crowd, feel free to stop me at any given point in time with any question. Much more preferred than waiting for the end for Q&A and then we have that awkward silence of does anybody have questions moment. So without further ado, let me give you a flavor of what we're going to be covering today. After like a very short intro, I have prepared some quick regulatory global overview that we have at this moment. Some KYT, AML, and travel rule specific landscape that we are seeing from our angle, and then some quick overview of our products, and then insights that we gather from interacting with over 200 customers today in the specific area. The previous speaker, Carla, gave a really great overview of MiCA and very specific regulatory, let's say, frameworks that are coming here. So I'm not going to be spending too much time focusing that much on the regulatory side, as much on what does it mean in actual kind of practice, and how are we utilizing this when we're interacting, when we're transacting, when we're doing kind of different activities on and off chain, basically. So a short intro of myself, why I might be relevant to speak about this topic. For the past 3 years, I've been in big Web3 companies, mainly in product area. And I have some 12 plus years of experience as a business developer, mainly coming from a startup ecosystem and working with more smaller innovative companies across different industries. And I've worked with a bunch of them over the years, helped them raise fairly a lot of money. And in the free time, I like to do woodworking. So in the break, if you're passionate about that, feel free to approach me as well. The company I'm working at now, and I'm very kind of proud to be the part of, is Fireblocks. So Fireblocks is an infrastructure provider. To give you a very rough flavor of how big of the infrastructure we're providing is, at any given point in time, between 20 and 25% of all crypto transactions worldwide are happening on our infrastructure. So we have a bunch of customers over 5 years on the market. And basically, we're trying to offer as high-quality tools as possible for our customers and big institutional players. We have, roughly speaking, like 4 areas. I'm not going to be spending much more than what you're seeing on the slide here. But the core product that we kind of started with is the custody solution that basically different players are using to store safely their assets. Then on top of that, we build like operational governance family of products, including automatic policies, different kind of mechanism to kind of control those automated flows. We have our network for transfers, for basically interacting with between key and big players in a kind of safe and secure way, and obviously DeFi and Web3 access, which have been booming in the past couple of years. To give you again a bit additional flavor, who's using us today. We have over 2,000 institutional clients and a bunch of wallet secure and transactions that are happening on our infrastructure today. And some more nice logos, again, just to get a flavor where we're coming from. So jumping on the quick kind of regulatory overview and what we're kind of seeing from our end is basically, the regulation is here. It's not coming, it's here. It's becoming more and more specific. So what we're basically seeing from kind of, interacting with our customers who need to be compliant, need to stay up to trend, is that there was a kind of this whole area of, let's say, 2015, 16, 17s, when very shyly regulation was coming in, which is crypto specific and digital asset specific. And usually the way it was done, it has kind of become a small part of a wider, let's say, centralized finance, traditional finance regulations. And as we're kind of moving along and towards today, we're seeing that regulations are becoming much more specific and dedicated for digital assets, purely because it's taking up so much, not necessarily of volumes, as much of interested activity coming from multiple parties, being like central banks, institutional customers, retail customers, like a whole variety of kind of different people want to interact using digital assets. And the obvious push towards regulators is coming saying, hey, we need to think of this more specifically. We need to kind of build frameworks that are, let's say, native for digital assets in a way. So what we're seeing, like, again, not going to go over the content on the slides, you get the picture. Like, it's becoming more specific, like by, any day, any month we're speaking. And, we have like a nice visual here describing on how much different markets are reacting and building specific digital assets, regulatory framework. And if you're speaking from a compliance angle, and I'll be tackling that in a few minutes, but we're getting now to the point when even the laws and regulations that were built originally to cover a wide spectrum of different things are now being revised and are asking of much more specific thing than they used to a year ago, let alone a couple of years ago. As a proof, like where we're like standing and what you're looking for is that the level of customization and level of different activities that our customers have when they're using our solutions and infrastructure are becoming much more specific. To give you a flavor of, if something in the AML, let's say, side of the things were just checked, like, okay, screen everything that was, medium risk or higher, we're going to drop, we're not going to be interacting with that because, we set internal policy and this is basically our appetite for risk when we're doing so. And we didn't think of this true. Like we set it probably once and now everything is running. We're doing, AML compliant checks, but, we didn't probably take a look at it for a year, maybe two. What we've seen in past year alone is that now where there were like, 1, 2, or 3 specific rules, now there's like 15, 20. People are looking at specific exposure types, category types, different type of, industry are being standardized in different ways, and the risk appetite is getting much more specific. So more often than not, we're now getting, compliance officers, coming to us with specific demands. Can you help us block, freeze, do this or that action if we're kind of conducting, we want to achieve this? Can you help us that with your solution? Which is kind of like an upside. Personally speaking, I think it's a good thing because now we have structures and framework we can latch ourselves on, and then we have a kind of baseline on what we want to build across the board. On one side, on the other side, we also want to kind of make sure that we build those relevant products, and I'll be covering that in a bit. But again, giving you a bit more flavor, and mostly I'll be speaking from KYT. So AML and travel rule perspective, as they're kind of something we have a wide experience on. If we're speaking about and then just kind of covering the bases, and I'm guessing since you're here on these workshops and not on the main stage, you probably know these things already. But just for the sake of posterity, when we're speaking about KYT and AML, is basically a broad regulation stating that you need to conduct compliance checks, checking the underlying risk of a specific address or transaction, and understanding that the other counterparty you're interacting with when you're sending or receiving something is A-OK, or at least at this point in time is A-OK, and then we might proceed down the line and do whatever activity we need to do with dedicated money. And then let's say a newer, fresher, and then obviously like solutions are there, like Chainalysis, Elliptics, TRM Labs, and different companies that are offering specific solutions for this to get that hopefully real-time risk assessment of the specific action you're trying to do on-chain. As a kind of newly and fresh, yeah, please. Yep. Yeah, perfect. Great question. Thank you. So mainly we are speaking about the, there's like a couple of layers there. So one, you have the, sanctioned entities, which is the obvious no-nos. Like, if it's an OFAC sanction list, it's, like your regular kind of, you don't interact with the other party because other party is a known, terrorist or whatnot. Not getting political there, but like, we're looking, from a practical standpoint. If we're looking at the, let's say, the types of insights that we're getting from the providers like Chain, Elliptic, and similar, the risk is basically looking at the counterparty you're trying to interact with. So whether you're trying a transaction or, a specific address you want to interact with, what's the risk of doing some business with that counterparty? Meaning that, has that, the other address on the other side, the counterparty, is it connected to, let's say, gambling? and you might connect gambling as a high-risk category that your business wouldn't like to interact with, or if it is interacting with, you want to have a double focus on that. Or if the counterparty over there got hacked or is connected to sanctioned entity in any shape, way, or form, directly or indirectly. There's like a lot of kind of, I would say, gray area of how do we measure that risk. The best way that we got, and I'm speaking collectively now from different providers' perspective, is at this point in time, this is the risk that we know of. It might be a different one an hour later or 24 hours later, but from a regulatory perspective, our duty is to check risk at this point in time and to base the action based on that risk. So if a provider told us we don't have info or it's a perceived as low risk now, we acted in best of faith, knowing that, okay, this is what we know now, and that's the probably best we can get at this point in time. 12 hours later, the counterparty might have, turned out to be, somebody imposing as somebody else, or like connected indirectly with other, like sanctioned entity or stuff, again, something like that. And then, we might treat completely different because now we have that intel saying, oh, it's a no-no to send and interact with that counterparty. So risk, again, depending on different providers that you ask, but basically they're giving you this like a flavor of what's the amount of risk that you are taking when interacting with a counterparty, probably doing an on-chain transaction. So yeah, that's kind of the rough idea. Thank you. It's a great question. Kind of mimicking and building up on top of this, hopefully giving us ability to contextualize that risk and actually have the, in theory, like good insight and good details of what are we actually, doing on chain, mimicking probably what we have today in centralized finance, through Swifts or other frameworks, is basically disseminating key information about both the sender and the receiver of specific transaction using the travel rule. So the travel rule, and this was like a shock for me, like when I first kind of interacted with it, was like, what traveling? Like who's moving when and what's doing what? But it basically goes to like a travel rule of your assets, of your fund you are sending between the two counterparties. And the travel rule regulation is saying, oh, can you please attach these and these data points when you're sending a transaction around the sending party, and probably the same one on the receiving party, so that we know, oh, I'm Pavle, I'm sending to Petar some money, and then I'm based here, he's based there. This is potentially even my social security number. This is his social security number, geographical address, and a bunch of things that we can. There was a good discussion on some of the events I attended on whether or not the travel rule as a regulation is a kind of counterintuitive thing for crypto, because like it's saying you have whole anonymity and whole value proposition of let's say the base kind of crypto concepts. On the other side, you got regulators saying, hey, you actually need to know who's sending and receiving money, and then obviously it involves a bunch of very personalized, sensitive data that you need to kind of collect, then send, store in a very safe and controlled manner. Hopefully, with the kind of bigger vision that the specific context and specific, info that you're getting here and is being exchanged and stored between different counterparties is helping contextualize your AML and risk areas, because now you have a bigger confidence that you know who you're interacting with, and therefore like you're dropping the chances of if them or whoever them might be are sanctioned entities interacting with bad players, or in category of industry you don't want to be interacting with as your business. There's a whole bunch of challenges we see today. I'll be coming to that shortly. But you're getting the rough picture of what the idea is, like providing context. Based on context, if we collectively know more, we're able to say we're feeling a bit more confident when we're interacting that it's a-okay. At the end of the day, and you have a seal of approval, internal and external, again, depending on your risk appetite that you might be having down the line. Any immediate questions on these things so far? Or is good? Okay. A-okay, thank you. Okay, moving forward. So again, some nice kind of context and again, regulatory perspective on how the AML and CFT requirements are for WASPs are changing, and then the whole regulation is being kind of built, moving, from 2019 and on. We're seeing again a wide variety of different geographies coming with a specific frameworks to address these. And especially, if you're a business that is doing a bunch of different kind of activities worldwide, it's very relevant for you because you probably need to comply if you're acting on a local market, whichever the local or regional market is, with those specific regulations, which might, differ, from place to place. A good example, and then also same goes for the travel rule implementation and harmonization, which is a new and fresh thing everybody in the kind of compliance segment is talking about, especially with MiCA, probably coming in on the 1st of January, although it has been pushed a couple of times already. Let's see. But the whole idea globally is that we're trying the regulators are trying to set a joint framework where we can interact and exchange all these kind of key insights from one another so we can have, at the end of the day, safe and compliant transactions and activity off-chain and on-chain at the end of the day. But to give you a flavor of, different regulatory perspectives, like for the travel rule in specific, if you were to send, let's say, a travel rule compliant message and a transaction, let's say in Switzerland, your threshold is 0. So every, amount of transaction that is 0 or higher needs to have accompanying travel rule message if you are putting under the definition of VASP, which is a virtual asset service provider, which most probably everyone is if you're dealing with these funds in this specific manner. If you're doing the similar thing in US, if I'm not mistaken, the threshold is $3,000. So $3,000 and below, you don't need to send a travel rule message because it's deemed as a lower amount, looking in a bigger perspective, and then you're sending your transaction in regular way. Again, we can have a whole different discussion of how you build a safeguard and safety mechanism so you're not doing a bunch of small transactions just to kind of stay below the radar. But it's a philosophical question. So let's not go there today. But you're getting the feeling. Like the whole purpose is providing context and exchanging. Something that is very specific, I wouldn't say per se new to the, let's say, Web3 crypto digital asset field, but something that the centralized finances have been doing for decades, is that personalized information exchange, which is very sensitive, especially, if you're sitting, let's say, you're an exchange. You've been doing, integration with a bunch of partners. You have your KYC process in place. You're interacting, and out of a sudden, in your KYC, let's say you're asking for 5 different data points for validating the KYC, like a driver license, taking a name, surname, maybe social security number, maybe an address of residence, and some other information. And out of a sudden, you need to comply with the travel rule regulations, and you need to send actual geographical address, legal entity name, up to like 15 different data points that you need to collect and send in order to comply with the regulation in the specific jurisdiction. So out of a sudden, your KYC process needs to be radically different. And you imagine a friction that a user has when you ask out of a sudden about 10 additional data points, especially to the old users who used to do, click, 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 yes, 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 moving forward, sending money, receiving funds, yada, yada. So it's not only like a matter of are you sending or not to whatever is that you need to send, is the question is, do you have that data? And the even tougher question is, does the counterparty you're interacting with have the data of their side, which has been a very tough situation globally, and there's like a bunch of kind of breaking hands on how to actually do this. Yeah.
If the jurisdiction on the other side, let's say China, has specific new rules that prohibit specific part of the data to be transferred, so what do you do then?
Yeah, it's a tough question, there's no clear answer, because like on one side, let's say you're sitting in EU and you're sending money to your counterparty. You are required under MiCA to send the counterparty data on your side if the counterparty doesn't send it to you. And then the question is, how do I send it if I don't have the data in the first place, or if the regulation is prohibiting to, on the local side of other parties to do that. Today, we don't have a, let's say, enforcement mechanism of what do we do in this situation, because we're still very early on in this kind of whole regulatory field of let's do our collective best. And that's been approach, so far. And then, I can share like what I'm seeing when I'm speaking with customers. I see like generally speaking 2 types of customers. So one that were a wider majority before saying we're doing compliance just for the sake of compliance. Let's just check on this box. We do have a check that we need to do, but actually practically we don't go too deep about this. And the other type of customer, which used to be a minority customer, says, no, we really want to be compliant. We see the value of compliance, and we really want to do everything by the book because it's in our best interest. Today, we're seeing this shift. Majority of customers saying, we really want to do all the checks that we need to do in a proper way. And minority of them are saying, yeah, let's not do it just yet. Let's wait as it rolls out. And then obviously, since we're speaking about the regulatory framework and governments, the pace is slow, but it's coming. It's definitely coming, if not already here for specific jurisdictions. I heard also an interesting point like last week that the MiCA is even kind of more specific and better than like if you're comparing it to US regulation, which was the first kind of to push for the travel rule kind of consolidation and a framework for counterparties to work on. So we have also an interesting opportunity to set a standard. Although like, and then there's like from a different perspective, like open conversation, will there be a standard war? Because today we have many different WASPs network that are playing globally. Interestingly enough, if you calculate what they're claiming to have, how many WASPs, like we're speaking about 150 registered WASPs per network, and we're speaking about 5 to 7 networks globally currently operating. So let's say, to be really generous, it's 1,000 WASPs. If you collect everybody there, estimate is that globally we have 20 to 30,000 WASPs that qualify under the definition of WASPs. I'm speaking legal entities, not individuals, who need to comply with this. So, getting early on the kind of setting up the mechanism to comply with these regulations, in my perspective, and this is just a personal opinion, is smart thing to do, because you're kind of going over the children diseases very early on, where the regulators are fairly slacked and still kind of let's do our best effort yet. Although in a year, 2, 3 from now, I can imagine it's going to be a very hard cut, that you're not going to be able to get a license if you don't comply with very specific and very detailed local, regional, however, rules defining the regulation that you need to see. So, it's, do you want to build it now, or do you want to build it 2 years from now? And, what's your kind of learning curve and, again, appetite for, doing things? And, also like a fair question is, can your business, actually do it at this point in time? Because it can be a costly thing. Out of a sudden, you're not only investing, your time, but, your dev or let's say outsource time to integrate. You need to start collecting data. You're getting customer friction. Customers are not happy because of that. They might go to the competition. So it's a very kind of tough spot to be in as, let's say a retail company or even like a B2B counterparty, but it's going to come. So, if I was to give you unsolicited advice, is really start slowly implementing something on this front, and then see how it goes and how it shapes up down the line. Cool. Any other question before I move to the next one? Okay, sounds good. So to give you more flavor where I'm coming from with all these claims and insights. So basically, we have this is our compliance suite of products that we have today. So we're doing in 2 main areas. So one is the KYT and AML and the travel rule checks. The access is available both through our console and API, and we are seeing a fair amount, like a fairly similar amounts of customers interacting, through UI versus API there. Our basic kind of value proposition of the integrations we have today is based on kind of customization, automation, and reconciliation of the data. hopefully, our, let's say, vision and goal that we're trying to achieve constantly is to give customers compliance checks out of the box that they can conduct their transactions, activities, on-chain, off-chain in a compliant manner, very, very easily. To do so, we've been basically integrating with Chainalysis and Elliptic on the AML side of things, also their V2s, and Nota Bene and Trust protocol for the travel rule part. So basically, we're kind of trying to give like a whole suite to our customers of different compliance checks that are necessary when they're kind of sending and receiving assets on day-to-day basis. To give you kind of a bit more flavor on what's under the hood, with all the integrations we have today, so this goes for both AML and travel rule part, we have a whole policy layer that is giving our customers ability to customize specific rules. So they can basically, when you have, you're sending a specific transaction and you want to check it first, you define your, screening policy saying, oh, I want to actually scan this transaction. It's interesting for me to get the underlying risk. We register it with the provider. Once we get the feedback from a provider, Chain, Elliptic, Nota Bene, we send, hey, this is the info around it. What's the verdict you want to make? And I'm speaking about the automated verdict. So oh, if my risk is 5 or above, drop the transaction. I don't want to be interacting with this.
Sorry for the regulatory thing, but when you say automated verdict, wouldn't that come into the new European AI Act?
So basically, when I say so the automated verdict, how are we basically doing that?
No. What's the upcoming regulation of the AI?
Not, yeah. Yeah, so it's we're good. If we're speaking like a mechanics wise, it's not under that regulation. Yeah. But yeah, the basic mechanic is like, imagine you're like you have retail customers and you're doing thousands of transactions daily, and you have a compliance officer or office or a whole team dedicated to this, manually reviewing each and every transaction, making a decision of a go no go, like should we allow the send or not to send. Basically, what we're giving is a layer when you're building a rule-based mechanism that says, if this, then that. And virtually, we give the compliance officers ability to build these comprehensive rules that then react in everything that was good is great, it's a happy path. Everything that was obviously bad, drop it. We don't want to be sending or interacting this. And everything which is edgy, let's then freeze it, stop it, and then conduct a manual review because you might be getting additional data to pull. And we're giving our customers ability to fully customize this because it's just gonna get crazy if you're manually doing that and you have big operations. It's not sustainable in the short run, let alone in the long run. But you're getting the idea of
You might have to need AI in the middle part eventually. Depending on how big you are.
Depends. Yeah, there's it's a really it's a great question. The way we're interacting today is that on our whole policy suite, and then compliance policies are a very small part of our overall transaction policies and policies you can build on top of the Fireblocks infrastructure. It can get very cumbersome when you have 100 rules per workspace to navigate, okay, what's gonna be happening here? What do we wanna, because there's so many different cases and scenarios and edge cases and what can happen. If conceptually speaking, if you're speaking about how hard can it be? I have a transaction, I send it to a provider gives me an answer, and I do a verdict based on that. What happens if a provider doesn't answer in allocated amount of time? Do you stop? Do you block? Do you allow? Do you bypass? What happens if you get no info from a provider? Do you stop? Do you block? Do you allow? And then you get into these kind of very specifics that today we are not taking a stance on, you should do that. We are not a compliance provider. We are infrastructure that you can use to set your specific rules. Most, let's say commonly, as a rule of the thumb, we say always take a conservative approach. By that you cannot, you're again dropping the surface of taking the risk and dropping your risk appetite. And then let's see what it goes. It really depends on the use case. It really depends on the profile of counterparties you're interacting with and your overall risk. what's interesting, what we're seeing, and something that it's let's say cooking in behind, is that today our compliance checks are embedded part of the transaction flows. So very early on, when you initiate a transaction in Fireblocks, first thing that we do are actually compliance checks, because if the result is nay, you want to stop that transactions from even going to on-chain realization. Again, obvious one. What we're trying to actually build, and something is coming from customers, is to start doing compliance checks before even we initiate the transactions. So we do a whole pre-screening of, and I'm not speaking about the OFAC sanction, again, obvious one, fairly easy to manage. You have a fixed list that you just don't interact with, and you stop right away. But rather, like we see customers saying, oh, we don't even want to be trying to build a transaction if the counterparty has a risk of X, Y, and Z. So we're going to blacklist them right away and basically block, in our flows for even interacting with that counterparty. Funky things that happen when you have an incoming transaction, because like on-chain, you cannot stop somebody from sending you money. It's there, it's in your wallet. What we basically do in those scenarios, we have something which is called freeze. And this is basically a Fireblocks, I wouldn't call it proprietary, it's a status and a kind of strange, like a vacuum we put a transaction in. But basically what it does, if you get an incoming transaction with a high risk and is there, nobody can stop it because it got realized on-chain, we get it stuck in the frozen status, meaning that you cannot, that amount doesn't become spendable moving forward. Again, depending UTXO, non-UTXO kind of flavor there, but we kind of basically get it stuck there. You can do manual unfreeze pending the review of compliance officer, hopefully. But what you're gonna do with those funds depends differently from a local jurisdiction needs. In some jurisdiction, you have a regulator saying, yeah, you have this procedure, you can move those funds in your, let's say, vacuum wallet or quarantine wallet, so it doesn't get, your main thing doesn't get tainted, while we have some regulators saying, even internally moving these funds is deemed as illicit, so don't do anything without explicit approval from regulators doing X, Y, and Z in this specific case. And then, our stance, because like we're globally providing infrastructure, we need to accommodate all these different use cases. So we dropped like doing automatic, quarantine wallet move. Let's just get it stuck there so it doesn't taint and it doesn't kind of compromise other future transactions happening from the wallet or vault you're kind of initiating transaction to. So yeah, it's we have many edge cases collectively that we're trying to deal. Overall, as I mentioned in the beginning, what we're seeing as a constant trend is whatever there was like one or two rules or like very broad strokes of, oh, that's unacceptable risk, everything else is okay, so let it pass through. Now we're getting to these very, very specific ones saying, if these 5 specific things, then do action X, Y, and Z. In my mind, our, let's say, goal or duty from an infrastructure perspective is to give all the compliance officer good tools to manage all these different cases. Collectively speaking, is at one point I agree, it's gonna become a bit cumbersome because you will probably collectively need to get AI involved to make sure you're doing simulations on your configurations, what you're actually gonna get when you're doing a specific set of configs on your policy, workspace, controls, whatever. And then you have the whole kind of context of, I think we can all agree it's a generally good thing because it's building a more safer environment to transact and interact with different players. On the other side, it kind of is, in my mind at least, it's moving away from a kind of edge area of the business, which was like, oh, let's just be compliant and do whatever we need to be compliant, to, oh, we really want to be compliant by X, Y, and Z different regulations, standards, checks, and mechanisms. As without that, you're not going to get licensed, you're going to get fined, you're kind of be in very big problems as a business or as individual users for that matter. So again, it's a balance. Any immediate questions before I click through? Great. Okay. So moving again, giving you a bit more flavor when we're speaking. So as I mentioned, we have over 2,000 customers, institutional ones, that are using our infrastructure today. If we're speaking about the screening, which is consisted out of two parts today, which is your AML checks and travel rule checks, we have around 250 active customers who are using our solutions and some 2.5 million transactions being screened a month. I like to think we have a good insight of what's happening in the market and what's the actual usage out there. But obviously, like it's kind of constantly expanding. And to give you a flavor, in our last year alone, we more than 2x the number of transactions and amount of customers who are using these solutions, even though we didn't 2x our business. So it's becoming relevant to players that it wasn't relevant before, and we see a demand coming in from customers on the usage side. So what I'm gonna try to share in next few slides, and just being mindful of the time, are a couple of the insights we got from building these products. We have our AML suite was originally built some 4 years ago. Our travel rule integration first with Nota Bene was built last year. So these are the findings that I'm basing on that collective experience. So insight number one, and this is something we kind of already touched upon indirectly, is the balance between the speed and security. So before, remember I was mentioning we had the majority of customers let's just do a quick check of the underlying risk. If this and that, then screen. If not, let's just drop it. We would like to be doing this end-to-end in 5 to 10 seconds. We don't really care if we don't get results. We try to get a result in that allocated time. Our business model is very based on speed, high-speed trading or whatever use case. So we don't want to be wasting time, or let's say mimic it to end-user perspective. We don't want to be creating a laggy transaction, for our customer experience, because it got stuck in a certain status, and then we're getting heat from our customer your transactions take too long, and I paid super high gas. Why is this happening? Now what we're seeing is there's another side of the deal, which is saying originally we saw customers, and only a few, who were saying we're not gonna be passing through the transaction at all until the compliance check or checks has been done, until we actually know who the other side is. And we did, and then get final feedback from a provider saying, oh, this is the underlying risk, move it along or move it along. Some of them are even willing to spend up to 6 hours waiting and not letting a transaction pass through to get the feedback from a provider and get insight to make that verdict. Again, automatic or non-automatic for that matter. Yeah. Yeah, so longest times that we currently support on our infrastructure is up to 6 hours. Now we're thinking in some cases to expand it to 9 days. Yep. And this is just a side note, this is coming as a customer request. Yep. So on the one side, you have blockchain, which is promising faster transactions and whatnot, which was, I wouldn't say it was a compromise, but it was that there was a saying, okay, obviously if you're doing something fast, you're not doing all the possible or safety or necessary checks. As we're expanding the overall field, now we're getting to a point when you need to build these checks. Obviously the thing is you don't want to get an end user waiting for 9 days or 6 hours if they don't have to. Obviously, if you get the fast feedback on that, we're able to, again, move very fast transactions with all these things in place. Now we're seeing the requests coming in for pre-screens, for conducting reviews, blacklisting, whitelisting, all these things before we initiate the transactions. So we have let's say, a more solid or cleaner base that we are interacting with overall. And then what we're seeing as a mimic image of the whole thing is a more tight KYC, KYB process, because you need to have the data and insight to actually make this kind of decision. Oh, we know that the batch we have here is healthy, good, okay, and trustworthy parties overall that we can be interacting with. So now we're seeing like a bigger shift toward like, let's say, a compliant and secure let's say transactions overall, while still kind of maintaining that balance between the speed of doing things. So it's, if even though we have, just to kind of underline again, if we even like have these requests coming in from our regulators or internal, let's say, policies that we have in place, it doesn't mean that the transaction need to be slow. It just means we need to build it in an, thinking about the, let's say, holistic approach of how do we collectively do these things, exchange the data, exchange the insights, so we can do a quick thing for end users, hopefully, which is ideally 100% safe and a-okay. Moving to the second insight, and this goes a specific shout out to the travel rule as an area. The whole sunrise issue we're seeing today globally, as I mentioned, estimate 20 to 30K VASPs globally, currently less than 1,000 that are onboarded to travel rule. Regulators are fully aware of this. They understand the pain, and that's the I would say main, if not the only reason why they are not breaking their doors and charging fines for not being travel rule compliant, because it's a collective state of global ecosystem. There's not in critical mass of VASPs on any of the networks or in all the networks collectively. So you have a problem today that if I want to be a travel rule compliant and I'm sending all that PII, juicy PII that I need to store and securely manage in the first place, and I send it, I most probably don't have a VASP counterparty on other side who has the same things in place. So, I'm doing the best I can. I'm sending the info that I can, and it's, there. It's something that can be reviewed by regulators. And actually, in practice, we're seeing that regulators are saying, okay, we see you have travel rule implemented. We know it's not a full travel rule implementation and data exchange that it should be, but it's a good first step, and you're good. And then let's see how collectively things move, and when we get the kind of critical mass of adopters coming in. There's also, like, to give additional flavor to the whole area, additional challenge of, as you have these different VASPs networks and different solutions out there, there's still, like, because a regulation is a bit vague to what does the, how, like, in theory, it should be straightforward. I have PII data of my side, you have PII data of your side. Let's, accompanying similar way the SWIFT does in the exchange message. So besides the public sender receiver address, asset, and amount, you have these hopefully encrypted data that is kind of collectively there for a regulator X or reviewer epsilon to review. In practice, since we don't have a critical mass, it's you're only getting a partial, or you're not even getting a partial like a 50% there, but like 10% there, because remember the whole KYC KYB issue. If you don't have the data, and the travel rule is requiring you to input like 14 different pieces of info with the travel rule message, like, okay, we'll need to build that. We'll need to revisit the whole KYC KYB process. You need to store it. You need to encrypt it. You need to do a bunch of different things. And then the providers, the solutions out there, because the regulation is a bit loosey-goosey in a way. If you're speaking from this perspective, we have different interpretations of the regulations, and then therefore different solutions that are being built in the area. And then again, depending on your local jurisdiction, the flavor of it might be this or that. While we still don't have a global synchronization, you have the FAT task force that has been done the first kind of pick of it, and now everybody's trying to, and I say everybody, but most like regulators are trying to kind of copy paste the framework to their own context. But then it's kind of very tricky, like who are the counterparties, who are the VASPs in their networks that are, playing in their jurisdiction. So it's tricky. To give you like additional kind of insight on this one, we do have jurisdictions where like 80-90% of all digital asset transactions are happening on our infrastructures. And we know the regulators have issues because of that. Because like even though we, let's say, almost monopolize certain jurisdictions from that perspective, you still don't have all the necessary info, and not all VASPs are on the same network to exchange the message to begin with. So in theory, even though it could be easily done, it's very hard because like it involves a bunch of different parties, agreeing to something. Plus side of it, this is a huge opportunity because like this is coming. It's not gonna go away, and companies are gonna be required to do so. It's only the matter of time where like the regulators are coming in and saying, Harley, okay, now we're cutting, and then everybody who doesn't do this in this specific manner, we're not getting a license or we're gonna get fined, and the fines are, as you can imagine, pretty huge. Any quick question on this one, or we're good? Okay. Moving on to the third insights. So yeah, limitations of the product context, the whole travel rule PI gathering information that I think I touched upon this a couple of times at least, but you get the picture. You need to revisit your whole process from very ground up, and especially to the point when, out of a sudden you're holding and collecting a bunch of sensitive data that you didn't before, which poses, a different challenges from how do you store it, all the GDPRs and similar like regulations like defining on how should you do it. You need to start thinking about this from a grounds up, and most probably, and then I'm speaking more now from a R&D and product perspective, is the way you build your system architecture needs to reflect these needs in a sustainable manner. Otherwise, you're going to end up doing a bunch of hybrid things and plugins that might get buggy or slow and actually impact the users in a bad way, even although you kind of think it through many times over. So do include all the necessary and right people, like if you're interacting on this on a company level for this, because like it can get pretty interesting and tough. Additionally, again, we can look at it from a different perspective as an opportunity. If you are starting to collect the insights and data, again, minding all the regulations you're doing, nothing illegal there, but this might be a very interesting plugin to your business, to the offering you are creating, and just making sure you're interacting with overall kind of safe and secure players that then can be interacting in different manners. And yeah, last point was exactly this. Like you want to think of scale. You want to think, if even though you're maybe by today's regulations required to do a travel rule exchange or AML check for 10, 20, 30% of your overall transactions volumes and numbers that you have, very quickly is going to be like 80, 90% or even 100% of all the transactions or activities that you are doing. So you want to make sure you're building a scalable mechanisms. When I say mechanism, I don't think necessarily only software solutions, but like internal procedures-wise, the way you review and follow the different regulations and build these kind of controls in place becomes even more key than before. Because again, I truly believe this is not going to go away. It's only going to become more and more specific and more demanding moving forward. Especially as and I was just exchanging, I think, with Nicola like on a break. Like we're now like I read somewhere last week there's like 0.5% of global adoption of all digital asset crypto, and then we're seeing trillions of values being moved around. Imagine if when we get to early adopter stage, and there's like 10 or 15% of global population using, crypto, the amount of controls and tools and ways to, see and understand truly what is happening becomes much more critical, because we're going to be seeing, volumes going through the roof, not maybe, this or next year, but in a fair, like close future, and you'll be required to do all of these bunch of different kind of checks. Making sure you are not expanding your business towards like providing an unsafe service to your end users. Yep.
My question would be about the cost. So from your perspective, how expensive it is to develop it and how expensive it is to buy it if you want to buy it?
Yeah. So again, coming from the setup that we know and have. Building it up on your own probably is very costly, because you're probably going to need, it's not like a 2-person R&D team that can do this. You probably need 1 or 2 different teams of 4 to 5 people building a solution completely from the scratch with a very well thought through architecture approach. The flexibility of using existing like tools out there, integration is obviously they're dropping your initial costs right away. All the providers that we have in the integration with today are offering a flexible model based on volumes. So you're saying basically the pricing is based per screening. So if you're doing like 300 screens, you don't have big volumes, you're paying a lower fee that can be a couple of thousand of euros or more on a quarterly level. So it doesn't have to be too costly. Obviously, if you're doing a bunch of screenings and you have requirements for a bunch of screenings, this can go up to 100K plus costs per annum in the area. With again, you're like, and there's always a question like, even though if you buy a direct solution, you'll still probably need to build a direct integration or other way around. So again, you need R&D team and a couple of more people of doing these things. So it can become quite costly. What's the plus side of it is that the solutions popping up out there are becoming much more and more affordable by the day because there's like a natural competition of different providers giving you tools. And then you can, today if you're buying something in AML, let's say, stuff, you're picking everything between 30 and 50 individual providers, that can offer you insights on that side. With a couple of big ones, and there's like a bunch of medium and small ones. Again, really depends on your use case and your jurisdictions and whatnot. So yeah, it's something that interestingly enough, we're seeing like this is directly coming from compliance budgets. It's not operations. It's not your day-to-day work. You are, because this is a requirement coming from questioning your license, your ability to do business. You're probably going to have dedicated budgets in companies to do these integrations work, R&D work, whatever you need to do to build these things in place. So yeah. Any other immediate questions? And I think we're at the top of the hour, if not a bit over. Sorry. So yeah, thank you all for the great questions. I hope this was useful. And yeah, feel free to reach out. This leads to my LinkedIn if you have any specific things, or the usual is like if you're a Fireblocks customers and if you have like additional questions on compliance, feel free also to reach out. You don't need to open a ticket for that. So yeah, thank you.